Warren Buffett is one of the wealthiest and most successful businessmen in history. He is famous for his investing techniques, and he has managed to amass a fortune of over $100 billion. Of course, this is not because he was lucky, and money just magically appeared on his feet out of nowhere. Rather, his success is due in part to his incredible financial skills. He has put a lot of hard work into building his fortune and has followed some steps or ways that allowed him to reach success. It's no secret that many people are looking for ways to earn a higher return on their investments by looking out for the practices of rich people like Warren Buffett. Therefore, if you're looking for ways to earn a return of 50% per year, then look no further because you will learn how to in this video. Please consider liking and subscribing, especially if you like this type of content. We always appreciate any kind of support. Note that the ideas and suggestions presented in the video are for informational purposes only. Please consult a certified expert first before making any financial decisions. Welcome to EM3 Financial Freedom Strategies, where you learn how to manage your time and money to achieve financial freedom. If you want to know all the juicy details, then make sure to watch until the very end. Having 50% returns seem to be impossible for many. However, even if the majority cannot do it, someone like Warren guarantees that he can. It does sound too good to be true. But Warren had mentioned it in one of his interviews. He said, quote unquote, "If I was running $1 million today, or $10 million for that matter, I'd be fully invested. Anyone who says that size does not hurt investment performance is selling. The highest rates of return I've ever achieved were in the 1950s. I killed the Dow. You ought to see the numbers. But I was investing peanuts then. It's a huge structural advantage not to have a lot of money. I think I could make you 50% a year on $1 million. No, I know I could. I guarantee that." You must be wondering where he got the confidence to make such a bold statement. Do take note that in his quote, he was not talking about his money amounting to billions. Instead, he was talking about millions, and he implied that managing a smaller amount of money is a lot easier to make 50% returns per year compared to making that many returns for billions of dollars. Just imagine it through numbers. 50% of a million is more reachable than 50% of a billion, right? This also means that you don't need billions of money to get that much returns. So, what strategies does Warren use to earn such incredible returns? Keep on watching. One of the strategies Warren follows is investing when the price is under the intrinsic value. For everyone to be able to come to the same page, intrinsic value is the estimated worth of the asset. Simply speaking, the intrinsic value may be regarded as the amount that the company would be worth if it was sold in its entirety, including all assets. What does it mean for you to invest below intrinsic value? Well, this is how investors shop for hidden gems in the market. When market prices are lower than intrinsic value, this means that there will be greater potential profits in the future as the value rises over time. A good example of this is buying into a company that is going through a crisis affecting its market price. You buy at cheap rates, well below the intrinsic value, which basically means that the stock price is undervalued. When prices go up, you will be able to get high returns, especially when the market price becomes overpriced. You should also give considerable attention to the market cycle because the market fluctuates according to the public's emotions. For example, there are periods when the market climbs up sharply as investors are optimistic, but there are also periods where the public turns pessimistic, causing the markets to fall sharply. Therefore, make sure to be aware of the market's mood and how the prices compare to the intrinsic value of the stock price. If you are able to see some decline due to mass panic, then chances are some stock prices might get underpriced, enough for you to buy in and make some good gains in the long run. You might be thinking, isn't this just buying low and selling high? Well, you won't be able to just sit around and wait for things to appear and rise on their own. You will still need to work hard to look for investment opportunities like the one Warren loves to invest in, which are companies that have gone through rough patches but have the potential to grow further. With this in mind, there comes the next strategy, which is to look for lots and lots of companies and businesses with low stock prices. And by lots, it means thousands, not just in 2 digits or 3 digits. Ultimately, individuals that study stocks the most will often perform the best in the stock market. In principle, investor returns will be greater the more stocks you check and the more stock reports you read. As Warren Buffett once said, quote unquote, "When I started, I went through the pages of the manuals page by page. I probably went through 20,000 pages in the Moody's industrial, transportation, banks, and finance manuals. And I did it twice. And I actually, looked at every business. I didn't look very hard at some." Moving on, other than looking into lots and lots of stocks, another strategy is to invest in small companies. Why not the big ones, you ask? Look, many people are looking into these big companies already. Therefore, if you have the chance to invest in some small cap companies with big potential, then it could be your big break. This is also part of what Warren talks about. Right now, he has billions in his hands. It just does not make sense to take $1 million out of his billions and then deliberately invest $1 million worth of money into a small company. Even if he earns $500,000 back, which is 50% of $1 million, it does not really fill the gaps in his teeth with his billions. This is why he specifically lowered the amount to $1 million, because with that amount, it makes perfect sense to earn $500,000. It's very desirable and is worth the investment. In connection to this, if you are looking for small businesses, ensure that you're looking into US stocks. US stocks are very much well regulated by the country, as opposed to stocks that come from other countries where regulations may not be as stringent or as enforced as they are in the US. This statement is not to discriminate against other countries. This just means that US stocks have more potential for growth because the country is developed and well managed. It really is up to you if you want to look out for stocks situated in other regions. Hopefully, this video has given you some insight into Warren Buffett's investing techniques. As always, we at EM3 wish you the best of luck in any of your endeavors. In the meantime, we hope you enjoyed watching this video, and don't forget to give a thumbs up if you liked it. Please subscribe if you haven't done so already to see more of our content. If you liked our content, then please check out our other videos. Thank you for watching and see you in the next video.